Good day, ladies and gentlemen. I hope you're well. So, in this session, it's going to be a structural market cycle audit based on chain data and macro liquidity data. So, no narratives, not emotional based conclusions, only indicators that measure what Bitcoin and the crypto market is doing, and historically, what have they implied. We're going to be going through a lot of charts, such as the Pi cycle top, the MVRV. We might touch upon the money supply as well, the M2 money supply, the Puell multiple, Bitcoin dominance, the price chart, etc. We may also talk about ETFs depending on how things go along. So just very quickly, I do need to end the stream a little bit earlier today. Nevertheless, we're going to be using a lot of on-chain indicators. Now, I like them because they're built directly from data recorded on the blockchain itself, and they measure what the network and the market are really doing, using numbers obviously directly from the blockchain. So it is hard data, not like headline noise, not like hype, and it can't be tempered with. So just before we get into the rest of the live stream, let's just have a quick look on who's here. Good morning, Mike Volmer. I hope you're well. And then John Legend as well. Oh, bless you. Mr. Alex Storyteller. Dogeball, I hope you're well. Black Hat Team, I hope you're well. Peace of my mind, welcome. Lasers go pow pow, I love that username. We've also got Nightbot in the chat as well. I do love Nightbot. Let's have a quick look at what the indicator, let's have a quick look at the price action to begin with. Okay, so here we've got the price action over the last couple of months. And we've got Fibonacci on as well. So what we see is from the highs of October the 6th, which could potentially have been the all-time high for this cycle, because time-wise, that was pretty much around about when we expected the all-time high to occur. So we've got the all-time high there. We've come straight down, almost to touch this trend line. Bearing in mind, I don't actually draw my trend lines completely properly, but we've got we hit a bottom. What is this? About 80,000, 85,000 US dollars. Oh, that was the high. The low is 80,000 US dollars, and we've ranged here for a bit, going up to the golden pocket. It did struggle here. We did meet resistance, but it has broken out for the last, I think, 2 or 3 days. Yep, so it broke out last 2 days. I think actually it didn't even go down. It closed above 95 thousand US dollars. What we're looking for now is the next level. So we're expecting it, probably it will go up to 100,000, and then we'll see from there whether it meets resistance. That is the next resistance zone, whether it can go above that, or if it will come back down to the golden pocket area again. If we have a look and we zoom out when it comes to the price action, so when we zoom out of the price action, we can see that we've been in this upward trend in this channel since round about October 2023. We've been making higher highs and higher lows. So my best guess is that we're going to continue to go up in this channel. Obviously, the all-time high is at 26,000 US dollars. Now, if that was the cycle top for this cycle, I presume we're going to range for some time between 126 and 80,000 US dollars. The reason why 80,000, because Bitcoin has not gone below the price that it has been on election day, and that was around about or just under 70,000 US dollars for that. If we have a look at, I'll share this as well. So this is the heat map, and this is where I look to see where price could potentially be going. We don't have too much liquidity above this area. We do have liquidity above this area, but it gets smaller and smaller. So we could see a lot of resistance at 100,000 US dollars. It's more than likely, based on the liquidity map, that it's going to get rejected and it's going to come down towards the golden pocket area again. This is on the 3-day chart. Let me just quickly check the 2-week. Yes, there's a lot more liquidity down below on the 2-week as well. In fact, that's underneath the golden pocket area, a little bit underneath the golden pocket area. That's quite a lot of leverage liquidity down there. Okay, so if we zoom out again and we look at the rainbow chart, what we can see from the rainbow chart is whenever Bitcoin or the price is in the lower brackets of the rainbow chart, it's a good opportunity to buy. And as it goes up higher, so the more it is towards the red, the more selling pressure that you're going to get, the more likely it is going to be the top of the market. And at the moment, it's pretty much near fire sale buy area. So it's quite low according to the rainbow chart. And if we have a look at the Bitcoin ETF, so with the Bitcoin ETF, and with the Bitcoin ETF, we have had a couple of good days. So on Monday, we had 116 million US dollars come into the ETFs. Then on Tuesday, it was 753 million. Yesterday, it was 840 million US dollars. So we have had a good couple of days. So that is pretty much the price action for now. If we have a look at the Pi cycle top, which I need to get out 1 second, the Pi cycle top, which we have actually covered quite a few times. We are literally nowhere near where we should be. Okay, so screen's not sharing. Share my screen. Love the Pi cycle top. It's actually my favorite indicator to call the all-time tops and bottoms. So here you can see it generally throughout Bitcoin's actually for a while, but what we want to get to is right at the very end. As you can see, the red line, which is the 101-day moving average, which needs to go above the 350-day moving average, that hasn't happened. In fact, there's quite a gap in the Pi cycle top. Now, if we look at the Pi cycle top, there have been 5 tops or 5 all-time highs in Bitcoin's bull markets since the Genesis block in 2009. And the Pi cycle top has accurately called 4 of them. The only one that it hasn't caught or it hasn't called was the one that was the second peak in 2021. The price difference itself was only 5,000 US dollars, and the second peak is considered by a lot of people to be a dead cat bounce. Other than that, all the other peaks have been called. When you look at what years are these? Oh, this is 2025 still. When you go back, and I have done this several times with you guys, I know I have, so I'm not going to show you the chart. When you go back to 2013, Bitcoin was 4 days off the actual pi cycle top, and it was only 87 US dollars off the top. So the indicator went off on the 5th of April. The actual pi cycle top was on the 9th of April. 2013, the second peak. Bitcoin was only 1 day off. It triggered on the 1st of December, and the actual all-time high was a day before on the 30th of December. The price difference was only 15 US dollars. 2027, the pi cycle top was off by 2 days. So the Bitcoin indicator went off on the 17th of December, and the pi cycle top went off on the 17th of December. The Bitcoin top was on the 15th of December. The Bitcoin top was on the 17th of December, and it was about 150 US dollars off. 2021, April 2021, pi cycle top was hit on the 12th of April. The actual all-time high was on the 14th of April, and it wasn't off by very much at all. If we look at Bitcoin dominance now, past performance is no guarantee of future results. That's completely true. However, we can't, with the pi cycle top, the reason why I like it so much is, one, it is the most accurate indicator in Bitcoin's history. One. Two, is actually based upon pi. The circumference is you remember pi from school, don't you? It's this 3.14 number that helps you figure out what the circumference of a circle. It's a mathematical equation. So yeah, I really do like the pi cycle top. It's been accurate 4 out of 5 times, and the last time it wasn't accurate. Like I said, there was only a £5,000 $5,000 US dollar difference, and that was the only time that it hasn't hit the all-time high. But a lot of people do say that was a dead cat bounce, and we can see here as well. So here, oh, it's not even on. 1 second. Here, so with Bitcoin dominance, okay, so with the dominance, and we'll actually we did a live stream. Our last live stream was on Bitcoin dominance. Yes, it was. Okay, so with Bitcoin dominance, what you need to have, it's not completely like a weighing scale, if that makes sense, but it's very close to one. Okay, so Bitcoin dominance is not an on-chain metric. Some people do have elements of on-chain on there, and they call it an on-chain metric. This is not an on-chain metric right here. And because I've put this small, let me take this off just for a moment. I have too many screens. In fact, I have 2 screens in front of me, so I have to go in between them. So Bitcoin dominance is the share Bitcoin has of the total crypto market value. That's the Bitcoin market cap divided by the total crypto market cap, and that equals Bitcoin dominance. Every time Bitcoin dominance rises, Bitcoin gains a share or more of a share of the entire market, and it's called risk off because people are really putting their money into Bitcoin. They're doing that because Bitcoin, when it comes to crypto, is considered a safe haven. When the dominance falls, altcoins gain share over Bitcoin, and it's actually called risk on, or it's called an alt season. However, it's not guaranteed because it's not a weighing scale. Dominance, especially now, and we did cover this in the last live stream, it can move a lot because, one, Bitcoin moves, its market share is so great, because alts move, or because there's new supply and value that can appear anywhere, like stable coins. New coins can be launched and all the rest of it. So it's not just like a weighing scale, if that makes sense. There are many other charts, it's like the total 2, the total 3, all the rest of it. So the Bitcoin dominance has really been distorted quite a lot by stable coins. So when a lot of people used to come into crypto, they always used to go to Bitcoin because it was a safe haven, because it was the thing that everybody knew about. After Bitcoin, money will rotate into ETH, and we covered this in the last live stream. The reason why money rotated into ETH was because ETH had the most amount of liquidity, and it was considered the safest altcoin, if that makes sense. So ETH, the idea and the white paper of Ethereum came out in 2013. The ICO is in 2014, and ETH actually went live in July, 2015. So 2013, 2014, and then 2015. And obviously money used to rotate straight into Ethereum. Now we've got things like the ETF. So we've got a number of ETFs. Money goes straight onto either the Bitcoin ETF, it can go over onto Ethereum ETF, or it can go into one of the other ETFs. Bitcoin is not always considered, well, no, actually it still is, but it's not the only way. It's not the only way to onboard people onto crypto anymore, especially when it comes to stable coins. So there's a huge amount of stable coins in the market at the moment. Stable coins initially appeared in the early days of crypto. There was the BitUSD, which was founded in 2014. Tether was also founded in 2014 as well, but their macro impact has been seen recently, especially after 2017, after the 2017 bull run, etc. Now, if we have a look at the actual dominance of Bitcoin as it is, zoomed out, we can say here in the beginning of 2017, the dominance started to go up. And when you have a look on the actual price action, you can kind of see that Bitcoin was still starting to go up and all the rest of it. But it was here really where we had the, here we go, about 49. So it was around about 71 down to, I think it actually, I haven't put that one properly actually. Here you can see that decline there, around about 71 to a little bit higher actually. I've got a feeling I've actually done it wrong. It's about 71 down to just 35 it says here. But you can see that this is very, very clear. Very clear. The drop is very, very clear. This was the parabolic bull run of 2017. Again, we can see it again in 2021, coming right the way down to May. We had the all-time high in April 2021. The rest of it was in a sideways channel. Part 2 of 2021's bull run, i.e. the November 2021 high, wasn't coming off the Bitcoin dominance going down. Since then, we've been in this upward trend, making higher highs and higher lows, arguably from 2022. We've broken down below it, and we're now testing this as resistance here. What we really need to see for alt season is one of these sharp declines that we've seen here in 2021, and the other sharp decline that we saw in 2017. And I think I do actually have, let me see if I've got it. And another thing, actually, I'll share this as well. Another thing with the Bitcoin dominance is we've now got corporations coming into Bitcoin. And when I say corporations, there were corporations in 2017 because it was the ICO era. And it was the first time that corporations came into Bitcoin. You can see strategy here. It's currently holding 687,000 Bitcoins. These Bitcoins are not coming back onto the market, all the rest of it. So all of these companies are holding a huge amount of Bitcoin. They're not like retail. They're holding for the long term. These are companies that in the past for their balance sheets, they would buy things like real estate and bonds and all the rest of it. They don't need money every 5 minutes. So a lot of this money is going to stay. And let me see if I can find it actually. Here, the Smart Web Company. I'm actually doing a lot of work for them. They're so cute. They are 2,664 US dollars. Let's talk about the Puell Multiple as well. I've got that up. 1 second. So here we've got the Puell Multiple. With this, we're looking at a little bit more than just the price action. We're looking at a little bit more. 1 second, let me move it to the side. So with a Puell multiple, it is an on-chain indicator. And what it shows us is, about miners. Now, miners are the operational backbone of Bitcoin, and we have to take them into consideration when we're ever thinking about whether a bull run, if we're coming close to a bull run or if we're coming close to a bottom in a bear market. So miners can be individuals or they can be companies, but they do the same job. They run machines that secure the Bitcoin network and they produce new blocks. They literally are the backbone of the Bitcoin blockchain. Now they earn revenue in two ways. They earn revenue through block rewards. That's new Bitcoins created every 10 minutes with a new block. And currently they get just over a little over 3 Bitcoin per block. They also make money through transaction fees. Now, these are paid by users to get transactions confirmed and added onto the blockchain. When you use a centralized exchange, etc., or most of the exchanges, they actually put your fee in there, so you don't have to do it yourself. Now, the Puell multiple has one question that it needs to answer, and that literally is: are miners making unusually high or unusually low revenue compared to the last 12 months, because these are ongoing costs and running costs. So right now we're looking at miner economics, if that makes sense, because miners are more sensitive to the price changes because they're securing the network. Mining is not just about plugging in a computer. It's power, it's heat, it's machines, it's repairs, it's staff, it's space, it's all this cooling stuff that they have to do, and it's finances as well, because a lot of these companies have taken out loans, etc., that they need to service. So miners are physically running hardware 24/7, and they have real monthly bills to pay. It doesn't stop because the market's overheated or the market is quiet, and that's why miner profitability can change fast. If Bitcoin's price drops too much, miners' revenue drops immediately. If the hash rate rises, if the difficulty increases, and there's a difficulty adjustment every 2 weeks, they have to work harder and spend more money and energy to earn the same amount of Bitcoin. And obviously, we're taking into account here the cost of energy as well, and their margins can disappear very, very quickly. So we need to look at the miners to know where they are. So how do we spot bottoms and tops? So when the Puell multiple drops to very low levels, so under 0.5 here, it often means that miners are under a lot of pressure, and some miners may struggle to pay the electricity bills and operation costs, and weaker miners have to turn off their machines or switch them to do other things. And this tends to happen late in a bear market. When the Puell multiple is unusually high, so it's unusually high on this particular, and our charts measure this differently. So I think the chart on TradingView measures it at over 6 or 7. On this particular one that I look at, because it's just easier to understand, it's over, say, 3. Over 3. So when miner profit is unusually high, miners will sell, or they'll sell a large portion or a portion of their Bitcoin, because they have real costs that they need to cover, and they have a bear market to I'm just reading the chat as well. They have a bear market that they need to have money for, save up for. So the key is that the Puell multiple is a warning zone. It's not a perfect 2. Low Puell can mean bottoming conditions, high Puell can mean top conditions. And we see it here as well. So we see it here in 2013, March 2013. When was the all-time high? It was April 2013. We see it here in November 2013. Their revenue went up very, very high. When was the all-time high? Again, it was in November 2013. We see it here in December 2027. No, sorry, 2017. I do apologize. 2017. When was the all-time high in 2017? Bitcoin's second bull run, it was in December. So it does show that at this time they were making unusually high profits. So they were selling in to the actual bull run. 2021, it just about got to the red line, but it didn't cross over the red line. So what we see in 2021 is with the Puell, it didn't hit its extreme level. And that's because it's not measured on the actual all-time high. It's measured how high or unusually high the mining revenue is compared to the last 365 days. So by April 2021, where it almost hit it, mining revenue had already been quite high, because we were coming out of COVID, the COVID stimulus had all hit, etc. So for the average 1 year, the baseline had risen too. And this meant that even though the price was high, the Puell multiple never measures the actual high of the price. It's the revenue of the last year. By November 2021, the average was still high from earlier, so the November stood out less. But we are not now in the post-COVID era. We don't have all of that outrageous printing, if that makes sense. So we're not in that once in a lifetime post-COVID surge of liquidity, if that makes sense. The Puell multiple should be more clear at this time. It's very clear that the miners are nowhere near the red line. Bearing in mind, we have always had diminishing every time it's come, the Puell multiple has hit the red line. It's hit it a little bit less, but here we're nowhere near it. When was this? In June 2021, literally there was nothing there. If it was in 2024 and June 25. So it's absolutely nowhere near it at the moment. Another thing that we can look at is the gold ETF. So what happened with silver and gold? What happened with silver and gold, which I think is really important, and I do talk about it often. When gold got its ETF back in 2004, let me put the chart up. The silver chart. Go to gold. Share the screen. Exactly. That's why we have. So there's always new miners coming online. Miners, it is so hilarious. Hang on one second. Let me just get rid of that. With mining, I had no idea how important miners were until I was reading up and I studied the block size wars of 2015 to 2018. They're very, very powerful, exceptionally powerful. With mining, you have to start in the bear market. So miners know before anyone else, or they tend to feel it before anyone else when we're going through an all-time high, or we're going through a bull market or a bear market. Currently, they're not feeling it. So we need to look at them, and currently they're not feeling it. Right now, it's cheaper to mine Bitcoin than it is to buy Bitcoin. And we'll look at things, we'll look at other things in future live streams, but just know it's cheaper now. I actually know somebody in Canada who has, or, he kind of works in this sort of field. And now the banks are getting involved and they're approaching him, and they have money along along the lines of 500 million US Canadian dollars, or whatever they have there, Canadian dollars, to put into or make mining farms. And it's not just one bank, it's two banks that have approached him to do that. So with mining, just very quickly, 1 second, well, 1 minute, with mining, when it does come to that, especially institutional miners, industrial miners, blah, 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 there's something called a difficulty adjustment. And it's so crazy. It happens every 2 weeks, and it doesn't matter how many miners are on the network. The adjustment will just adjust itself to make sure that there's roughly one block every 10 minutes. It's absolutely crazy. When you look at the technology behind the blockchain, it's absolutely amazing. Let me just have a quick look at who's in the chat, because I know some people have joined. Oh, French Toast is here. 1 second. Oh, Alexander G. I'm just going to the top. Oh, there we go. My favorite American brother, Army Piper. I don't know if he's still in the chat. Oh, there you go. Oh, you got to have a lot of respect for Army Piper. Oh, okay. Acts 2.21. Hang on. Gosh, you guys have been talking. 1 second. Yes, it's a rainbow. You were actually, piece of my mind, you were actually saying one time when I was talking about God candles, and you were saying something along the lines of, are you religious? A God candle is something completely different. It's actually in TA, and it's a movement of like 10,000 US dollars. We'll be doing some a live stream on that, going through the chart and finding out why there was, where the God candles are and why they were there, etc. To me, okay, does it look like the top's in? Uh, I'll come to that soon. M Ninja, I hope you're well. I hope you're well. Smash the likes. Please, can you press the likes? I never say it, or I hardly ever ask people to press the likes. Please, could you? I have amazing mods. My mods are so good. and they keep everyone safe as well. Alexandra G, oh bless you. I'm glad you're here. JR, hello JR. I hope you're well. If Michael Saylor didn't promote Bitcoin, would Bitcoin be performing any better than all of the other cryptos? 100%, because it's completely decentralized. And we don't know who Satoshi is. That is so important, because even though that there are other coins that are decentralized, or they claim to be decentralized, you can at some point figure out who is who. Um, and you can't with Satoshi. So we don't know who Satoshi is. So nobody can find him and torture him and get the codes off him. If Satoshi was to come back, we would be in a lot of trouble. I'm not entirely sure what would happen to Bitcoin if he was to come back. Oh, French toaster. I hope you're well. I love that. Lasers go pow pow. Oh, John Legend's such a darling. What would happen to, I absolutely love Peace of My Mind, because he asks questions, and asking questions is a superpower, really. So what will happen to the miners when all of the Bitcoin is mined? Well, first of all, we're very early into cryptocurrency. We're in the fourth, we've had 4 halvings. There's 32 or 35 in total. Once all the Bitcoins have been mined, miners will earn their revenue from transaction fees. Black Hat team, I hope you're well. That would be lovely if we did get comments after the stream. El Salvador is making a city biovolcano, and they're going to be using the volcano to power Bitcoin mining, which is absolutely amazing. Absolutely amazing. And Iran, I said this in the last live stream as well. Iran has a lot of natural gas. Obviously, it's got a lot of sunlight and all the rest of it. They've been mining Bitcoin since 2018. Unfortunately, their currency's gone down to 0. And this is why we can't really rely on our currencies that much. All fiat currencies have gone down to 0 in history. There's not been one that's survived. So it's only a matter of time. And I would rather pass down Bitcoin than pass down US dollars, if that makes sense, or British pounds. Bearing in mind, the world's reserve currency before the US dollars was sterling, British pounds. It doesn't, because it shows what's happening the last 365 days, not what's currently happening. Things might change, but with the Puell multiple, it's what it's been like for the last 365 days, not what's happened now, and definitely not what the all-time high is. So it doesn't really follow the all-time high, the price of Bitcoin, in that way. Yeah, we won't be alive to see all of the Bitcoin coins being mined. That's going to happen in, I think it's 2140, year 2140, or something similar to that. During the bear market, I want to get into mining. I think that's absolutely wonderful. I hope you do, to help secure the network. I wanted to get into mining, and I wanted to have a mining farm at home. So I wanted to get maybe like 30, 40 miners or something, and have a mining farm at home. One, I couldn't do that because they're actually quite large or decently large. I would need a lot of space. Two, I couldn't do that because of the amount of heat that they will produce. It's going to be very, very uncomfortable no matter where in the house I would have had it. And three, the noise is terrible. So for Bitcoin mining, you either need a shed in the back garden, or well, when I say shed, you need to build a structure in the back garden for it, or you can have it hosted in other places as well. That's quite that's something that I have thought about, but I've just decided not to get into it because every 2 weeks the mining adjusts. The mining what's its name, the difficulty rate adjusts, and every 6 months China or another country comes out with a more better performing miner. When I interviewed Tactile Investing and also Mind Your Biz, what they did was they started companies, or they helped companies get off the ground during the 2022 bear market. And they actually made a huge amount of money. So if you time it properly, you make a lot of money. Like I'm talking about huge. I know someone who spent uh 800,000 US dollars, got a big mining farm together, 800,000 US dollars. In the first year, he made over 5 million. But I think this was in 2017, or maybe it was in 2021 or 2022. I'm not entirely sure. 2018 or 2022. I can't remember if it was the last bear market or the bear market before that. But he literally put in 800,000 US dollars into a mining farm, and he made over 5 million back in the first year. Some apartments in my area have electricity included in rent. I want to get one of those apartments to set up a bunch of rigs. Oh my gosh! So I had Ed Juline, who was who is the former director of Bitcoin advocacy at Strategy, literally Michael Saylor's number two. And he literally did that. He moved to a house. The electricity, etc., was included. He had an old miner. He put the miner up, and it was literally the equivalent of, I can't remember how much he said, but I'm pretty sure it was like 500. Was he in England? I can't remember now. It was something like £500 a month, for him to run that Bitcoin miner. World War III or dump? I'm not entirely sure what you mean by that. But what I will say was, if World War III happens, the currency that I'd rather be in is Bitcoin. Bitcoin is the best asset to hold in the time of war. One, we've just seen Iran's currency go almost to zero, almost the purchasing power go almost to zero, literally almost overnight. The second thing is, if you have to leave a country, you're not going to be able to take, gold or silver or your house or whatever with you, but you can easily take your Bitcoin. If World War III was to break out, I would actually, or if my country was to get hurt or bombed or whatever, I would prefer Bitcoin more than anything else. And good day to you as well. Could Iran you lose their Bitcoin? I really hope they don't. But I'm pretty sure if they do get taken over, or invaded, somebody will steal their Bitcoin. I'm pretty sure somebody will steal their Bitcoin. Tube and Jar, good day to you. I hope you're well. All fiat would eventually return. Yep, that's right. Bitmain Ant Miner X9. That sounds like a good piece of equipment. Good morning to you as well. Okay, where were we? Okay, so we were just going to end it. Oh, no, we were not. Was I going to talk about gold? I think I was just about to talk about gold. I do apologize. Okay, so when we're looking at the 4-year cycle, we need to understand something. When it comes to the ETFs changed the 4-year cycle when they were first announced. The Bitcoin ETF was first announced, I believe it was in January 2024. When it was first announced, Bitcoin had an all-time high before the halving. That's never happened before. If we look at gold, could something similar happen to gold? Now, gold has had a little rallies here and there, but when you zoom out and you look at the Megatron cycle of gold, we're looking at 2004. And I can't say this enough. 2004, we had the gold ETF approved. When it was launched in 2004, we literally went on this massive, yes, we did have a pullback here, but that's completely fine. When was this? It was 2008. This was the financial crisis. And we have it even more. The pullback was even worse for silver. So apart from this massive pullback, we literally went up for, I think it was roughly about 8 years or something similar to that, to 2011. So after the gold ETF, it changed the cycle of gold. Obviously, we slipped down into bear market, sideways action, all the rest of it. Coming into now, 2024-ish, 2024-ish, we've had another upwards trend with Bitcoin, with gold. It's just made a huge amount of progress, if that makes sense. Oops. It's made a huge amount of progress. We've had all-time highs after all-time highs, breaking all-time highs all the time. This has happened for multiple reasons. We're going to be going into silver on the next live stream, but when there is uncertainty, I can see Wix. Lasers go pow pow is saying hi to Wix, but I can't see him here. Oh yeah, there you are. I'll answer that in a moment. So there's been a number of reasons why we're making all-time highs in gold. What happens is that when gold flips, it used to go straight into silver. So it used to flip, people used to make their money on gold, then make their money on silver. Now you've got three things. You've got gold, silver, and Bitcoin. Bitcoin being digital gold, Bitcoin now having an ETF of its own. So the 4-year cycle, there's only one structure in the 4-year cycle. That is the halving. That's the only solid structure in the 4-year cycle. And that happens every X amount of blocks. It's not really based on time. It's based on the amount of blocks. So every 4 years, there is the halving. In between the 4 years, you have a bear market, you have a recovery year, you have a halving year, and a parabolic bull run year. So you have the halving year, the parabolic bull run year. Prices can't be sustained in the parabolic bull run year, so you then have a bear market followed by the recovery year, and then obviously the halving again. So with gold, the way that the ETF changed gold cycle, a lot more investors could access gold a lot more easier once the ETF for gold was approved. Does that mean now that with Bitcoin getting, and the same thing happened in silver, but I'm not going to go over silver because we'll do that next live stream with Formation and Bill Noble. But does that now mean that the Bitcoin cycle has changed because we've got so many more investors. We've got a new a new audience, or a new line of like investors coming into Bitcoin now. When you go back and you actually look at the reasons why the ETFs, because the first ETF was, I think it was in 2017. They wanted to get ETFs out very, very quickly. Sorry, 2013. They wanted to get ETFs out very, very quickly. And I think it was the Winklevoss twins who tried to launch the Winklevoss Bitcoin ETF, but that failed. And then every time that the ETFs have failed, it's been for actually legitimate reasons. And I think the SEC, to a certain point, was given a bad name by by the crypto community. What we had to do was we had to make sure that the security was better before the ETFs were approved. We had to make sure the technology was better before the ETFs were improved. Market manipulation wasn't as bad as it was. There's always going to be market manipulation. In fact, there's been a lot of market manipulation in silver, and that's why the price of silver has been kept down so low. So this is another thing that affects our all-time high, whether or not the cycle is done and completed. And there was one more thing that I was going to share with you guys, and I completely forgot. Oh no, I didn't. I know what it is now. One second. Who remembers this? There was a lot of talk about the Wall Street cheat sheet, the psychology of the market cycle. Now, for everyone, this is going to be different. For me, it's going to be very, very different because I was a degen investor. Those coins, my personal portfolio was in the euphoria phase in Q1 of 2024. That was the highest that my personal portfolio got to in 2024. It's never been higher after that. We thought 2024 was down here somewhere, but for me, that was the euphoria phase. And one thing that I know about the euphoria phase, back then, I knew a lot more people who were into, because that was my community, degen investors. They were sharing out. They were doing all the stuff that you would see at the euphoria phase. They were sharing out their profits, their portfolios, their success stories. Many of them. I remember this one person. He was like, I'm looking at what's its name, places that I'm going to buy in Dubai and all the rest of it. That is when the absolute euphoria phase is. And that happened for me when I look back at it in Q1 of 2024. Went right the way down as it did. And this is for me, okay? This is for me and my portfolio, which is probably different to everyone who's watching me now because I'm no longer a degen investor. And then in Q4 of 2024, when Trump got when Trump got nominated and he got into the White House, when he was elected as president, I should say that. And then in January and Q1 of 2025, that was when I was like, oh, we're back on. So that for me was this cheat sheet. And then after that, I've actually gone through a lot of these. Can you guys see it? Can you guys see my cursor? I'm not sure if you can, but that, I don't think you can. Oh gosh, I'm pointing things out on the chart. Then obviously you go down to anxiety, denial, panic, all the rest of it. I'm now at the last sort of like, I'm not even at anger. I'm just like past that now. Because for me as a degen investor, that's what happened over the last 2 years. Now, going back to the chart, because it's not the same for everyone. Remember, I was proper degen. Okay. So going now to the chart, when it comes to back then, back a long, long time ago, I was always like, okay, let's follow the 4-year cycle. When's the 4-year cycle going to end? It was meant to reach the all-time high in October, November 2025, and it did. In fact, when I actually looked back and calculated it, the 6th of November, that's the 5th, but the 6th of November, which was or is or has been the all-time high, that was the date that the all-time high was meant to hit. So what I'm waiting for me now to say, okay, the bull run is back on, I'm waiting for this level to be broken and ideally to come up to this trend line. If that does not happen, then I think we'll range between 126 and 70 for maybe the next year. No idea. I don't know. But what I have done is from roundabout October onwards, I have de-risked my portfolio and I'm out of almost all of my degen projects. I actually have a hardware wallet in a vault that I've just been too lazy to get to sell them. But as soon as I can, I'm going to be selling them. So it depends. So for everyone is different. For those people who were in Bitcoin, they've done really, really well. They've done exceptionally well. The reason why I was a degen investor was because I studied, as we do, or as I do, the previous cycles. And just like Peace was saying, it doesn't mean that that's going to happen again, if that makes sense. Mm. Just reading the rest of the comments before we end it. Okay. I don't get depressed. I will never get depressed in crypto. Literally never. I don't think I actually can because I know where Bitcoin is going. So even if I make a loss or whatever happens to all the other altcoins, I know where Bitcoin is going. So I'm never going to get depressed in crypto. Give up on that parabolic alt season. If I put up, let's switch it to here. This is now, we're looking at Bitcoin dominance here. We came out of this very long, strong channel here where we were making higher highs and higher lows, a channel that we've been in since late 2022. We came out of that in roundabout August 2025. So technically, this could have been our dump. I really hope it wasn't, because the other dumps were a lot more. Like you could literally see, look, here you go. You can see, there you go. That was when it rolled over in 2017, rolled over in 2021. August, September, October. Yep. That could have been it. I really hope it wasn't it. Bearing in mind, Bitcoin dominance has completely changed because we've got the stable coins. People don't on ramp using Bitcoin like they did in the past. And also Bitcoin, though it's considered the safest cryptocurrency, so are stable coins nowadays, if that makes sense. And we've got the Clarity Act coming out soon. And if they make something I won't speak about it yet, but like if they get interest in stable coins are just going to explode. So now this trend line here, this is going to be a resistance until we can go above it, if that makes sense. So each to their own. Everybody holds different coins. Everybody's in crypto for different things. I'm not a trader, in the sense that I'm not a scalper. I'm not a day trader. I am a swing trader, a position trader, and an investor, if that makes sense. But yeah, no, that's about it. Sorry. Oh, hang on. Who's this? Crypto Steve 7. I think you sent me a text, a DM. Oh, okay. I don't actually reply to my DMs. Like, apologies for that. But I'll send you a hi. I'll send you a hi because I've seen you here now. Okay, no, that's brilliant. So next week, on Tuesday, we have a collab with Formation and with Bill Noble, and we'll be going through silver, or we'll be looking at silver, the manipulation of silver, what silver is, all the rest of it, how high silver can go, etc. And then after that, I think we'll have on Thursday. Oh, and then we've got a crypto story also coming out on Monday. For the crypto story, we've got MJ. I met MJ at the CCCC. He's a host, or he's the host of the crypto radio station. He's done really, really well for himself, considering he lost 1 million in 1 minute at one point. And then since then, I mean, I don't know if I could have, like, I'm not sure what I would have done. That's a huge amount of money to lose in 1 minute. Gosh. Since then, he's done really well for himself. Okay, no, that's brilliant. Thank you so much for watching, and I will see you all next week.